like in most things in life, you become what you're around. If you're around super healthy people, I don't drink, I don't smoke, I do 6 miles a day, I go to the gym. If you're around that, you usually become it. If you're around very unhealthy people, you usually become very unhealthy. So it's the same with this. Now with this day and age, podcasts, the internet, YouTube, you can literally be around some of the biggest and best traders and you can learn from them. And then, as I said, you become what you're around. We never had that 20 years. There was no option to be around that level of success, knowledge. But now you can actually be around that by listening to the podcast, by being around the right people. So for me, instead of doom scrolling and on Instagram every day, just looking at TikTok, looking at nonsense, if you can put an hour or two a day listening, analysing what the traders in the industry that you're in are doing daily, that for me is that's going to be the difference between going around in circles or just going down versus to actually steadily going up.
Welcome everybody to another funded trader of TradethePool. Today, Adrian is with me, a new funded trader, second time funded, right? You did one the second time?
Yeah.
All righty. So let's start from there. You've been with us for a while now. You had 2 accounts, 2 funded accounts, have one. And tell us a little bit about the process from evaluation to funded.
Well, I trade my own account. So I have my own trading account and then I use prop firms. I trade stocks, I trade the NASDAQ and I trade gold. So with TradethePool, I trade stocks a specific way in my own account. And then I like to trade a certain other way with the funded accounts. So it's different strategies for my own account versus the funded account, which in my opinion is the best way to do it.
So do you do on your own account, do you do long term or swing?
Yeah, no, so I would say it's more swing trading in my own account and more day trading, scalping, day trading with TradethePool, for instance, with stocks. I mean, for stocks, I only use TradethePool. I don't know if there's any other options, but from what I can see, they're the best out there by far.
Appreciate it. Thank you. So tell us a little bit about, the process from going from evaluation all the way to the funded. Did you consider, do you see the evaluation as a tough challenge or you felt like this is quite easy to pass?
Well, as I said, so I use the prop firms to try stuff out. So I guess if I stuck to my rules and I really took my time, it would probably be a lot easier than I make it. Whereas when I'm trying stuff out, it can be a little bit trickier. And when I say tricky, it just means you end up blowing your account. Yeah.
But you are, as you said, you're learning a lot by just using someone else's capital and the evaluation fees, of course, you're skin in the game, right? For the petition.
It allows you to do trial and error with you've got a bit more skin in the game because you could just do a demo account. Everyone can use a demo account. But I think mindset-wise, a demo account, your brain will always tell you this isn't real. Mm-hmm. And what you do in a demo account, you'll never be able to do in your real account for most people.
True.
So the prop firms and TradethePool in this example helps bridge the gap between your real money account and the demo accounts. So it allows you to try new strategies out. It allows you to try, for some people, it allows them to be a little bit more aggressive. You do trial and error in your own account. Now you're risking losing all of your own money. You've only got to have one really bad day and you can really damage your real money account. Whereas if, as you know, with a prop firm account, if you have a bad day, bad week, you can always buy a new account.
Yeah, makes sense for sure. Yeah. So you mentioned you're trading stocks. How long you been doing that?
So I'm mid-40s now. I traded full-time in my 20s. I traded online. I traded on the city floor in London in my 20s. So I then went into another completely different industry after 8 to 10 years of trading. So I've basically done full circle.
Wow. Okay, so you do come with the background needed. You know where your edge is, your skill to
Yes and no.
perform.
Yes
Yeah,
and no. I would say if you trade now, how you trade. I mean, so we're talking 20 years ago.
yeah.
If you trade now, how you traded then, you probably won't do well. You've
Hmm.
got to adapt to the times. But I was a professional poker player for 8 to 10 years online. I did trading online 20 years ago. So it does help you adapt being in those industries. And as you know, one of the main things is discipline and learning to adapt are the main thing.
Tell me a little bit about that. It's interesting, the differences between what happened back then, like 20 years ago, the way you traded compared to today, for example.
And sorry if my head is going left, right. I've got 4 screens. Well, I've actually got 5 screens, and I've just monitoring a couple of positions. So apologies.
We all do that.
And
Yeah,
one of the positions I'm monitoring is actually with the fibers. So the stocks obviously don't open for another hour and a half. No, 2.5 hours. Sorry. So your question was, sorry, what was the question again, Michael?
a little bit different, the differences between what happened 20 years ago and comparing to today's market.
It's just everything being automated. You're going up against a lot of automation. Whereas trading back then was trading a little bit more on feel, whereas trading now is a lot more technical. So to answer your question specifically, 20 years ago, it was more fundamental trading for me. Now it's more technical.
Got it. Got it. Amazing. And as you said, you've been around in the game, took some time off, came back to trade, and you said you trade in stocks, but you also trade indices, commodities.
Yeah, with your sister company. So I trade with the fibers. Again, for me, I would say there's some good firms out there. I would say we're in a time now where there's a lot of shady firms versus good firms.
Sure.
But the fibers for me is head and shoulders above the rest. So I use the fibers I trade the NASDAQ and I trade gold and the DAX. Outside of that, I don't trade anything else. And I use trade the for stocks.
For stocks. Amazing. All right, I'm going to share my screen and show the guys at home how it looks like. So for those of you not familiar, every trader gets his own dashboard. The dashboard will show you your stats, the risk parameters, and you can really understand your progress and look at your equity curve. You can also check your achievements and payouts and customize your view, switch between light mode and dark mode. This is the 100K account, the flex evaluation. You also traded the funded, of course. You got paid on one of them, right? You got a payout. We'll talk about that in a second. And also reach termination on the 200K funded, right? So that will be very interesting to hear about. A lot of the times you go on YouTube and you see Lamborghinis and Ferraris, and no one's talk about how he lost in account, right?
Yeah.
The losses of it, and it's important for everyone to hear about it and learn from it. So this is one of the accounts, 100K. You needed to reach 6%. You did that perfectly. Very interesting learning curve, a balance curve, I guess. You took some pullbacks and then find your rhythm and made a nice move. 53% on the success rate, 1.6 on the risk reward, fairly decent. And tell me a little bit about your trading. What do you like to trade? How do you operate? What type of setups do you use?
Yeah, it's as I said earlier, it's more technical trading. It's just even this account you're looking at and my 200K account, which were both funded, I've had decent payouts, but I was still trying things out. I would like to think if I stuck to my rules and I stayed super disciplined and I actually downsized, not upsized, I would still have the accounts. But obviously when you're trying things out, that's where I've lost the accounts. And also you got to factor in when you're taking a payout, you're taking away some of your cushion because obviously the trailing drawdown. So you could say that was a mistake from me, or you could say it's just, I'm happy to go again and obviously get another funded account.
Yeah, I actually love the fact that you're doing the test and everything, just learning how to operate it differently, scalping, as you said, and day trading, because you can actually do that. You can use us as your place for testing, the factory for testing, and now you did prove that you deserve it, and you reach the funded stage, the payout as well. So that's amazing to see someone that is not just taking a setup that already works for him, but he tries to to find the rhythm or to find a new edge in the market. So that's amazing to see. Let's go a little bit over the trades that you had on the 200K. So that's basically the funded that you took the payouts.
Yeah. I had a payout on the 200K account. Correct. Yeah.
Walk me through it a little bit. What happened here?
With I mean, as I say, I would say, in my defense, I would say the big losses are really just down to trying a few different strategies out. If you ask me, would I do those would I mirror those trades in my own account, which I could have, because I have my own account, I trade with interactive brokers. I wouldn't. No way. I wouldn't never mirror those trades. One, they're too risky. Two, they're not tested and proven. So I'm just trying out different strategies. I mean, you could say, why don't you try these out in a demo account? It goes back to what I said earlier.
Yeah.
A demo account's not real money, even though a prop firm you could say is not real money, but when the account's live, it's the closest you'll get to real money. The difference is, if you know you blow the account, you can buy another one. And if you're good enough, you can pass again. Whereas if you blow your own account, it can take a very long time to come back from that.
And also mentally, right, on the psychological aspect of blowing your own money, it will be much harder to come back from that. And of course, you need to save again that actual money to.
Yeah, I think prop firms, if you're going down this, if you have your own account, I think your own account, it's compulsory. You stick to rules. You trade smaller rather than bigger. Whereas prop firms give you the option. They give you the luxury of trading a little bit bigger. Obviously, if you trade too big and you start gambling, that's not going to work either. So you've got to be some middle ground.
Yeah, I am looking at this TSLL trade, and you took 12,000 shares. You took also one here, 22,000, but in most cases, also in the previous account, you do have 100 shares, 200 shares, maybe 500 shares, etc. And here you went wild, right?
Yeah, I think for the upsizing, that's when I'm just trying different strategies out. Good actually observation, Michael. When you see that I'm trading a lot smaller, as you say, a few hundred shares, that's typically how I trade in my own account. When you see the bigger sizing, that's me trying stuff out. And obviously knowing that I've got the luxury that if this goes right, it's a decent payout for me. If it goes wrong, I'll just have to go again.
Yeah, it is giving you like a peace of mind that you can go wild or test it out, and worst thing that can come up with, you just buy another evaluation, pass it, because you already proved yourself that you can do that.
Yeah.
Amazing. So, Adrian, again, you've been around for a while now. Give us some tips, some advices for the young guys that just starting. We have a lot of 25 years old that been around for 2 months, 3 months, and they're trying the evaluation. What can they do in order to improve, besides the discipline side that it will take time?
I mean, if they're trading their own account, it's like I said, make sure when you're trading your own account, you're doing something that's tested and proven. When you have bad days, downsize, don't upsize. If they're trading their own account, and then you can take the risks. I don't like to say gambles, but you can take higher risks and you can try stuff out with the prop firms. So I would say that's important. If you're not trading your own account, then the best thing you can do is, I would say, then you need to get funded. You need to start building a cushion. You need to start building your own portfolio. So when you do get these payouts, you can put them into your own account. And I would say, to do that, you have to trade the prop firms more similar to as you would with your own account. So don't take as much risk. Downsize. When you have a bad day, downsize the next day. Don't upsize. So what I've noticed is what a lot of the losing traders would do, which we know is a lot of people, it's a large majority of people, they add to their losses and they cut their winners very quick. Whereas the winning traders and the people that know what they're doing, they will add to their winners and they will cut their losses very quick. So they're doing it. It's the complete opposite. When you look at what the losing traders do versus the winning traders, they are literally doing it the wrong way around. They're cutting their winners. So as soon as a stock's breaking out, they've sized up really large. They've seen $1,000 gain and they're panicking. But this is the time you should, worst case, just hold and let it run. Best case, add to that winner. What do? They cut it. So why is that really bad? Because when the position goes against them and they're losing, they add to that. They average down basically. So they average in. So they're inflating their losses and they're cutting their winners, which is the opposite of what you should be doing. But the mind, human nature will.
Yeah, it's very hard at the beginning to hold your trades when you see, as you mentioned, $1,000 is amazing for a new guy, but even a lot of the traders that will see the P&L with $100, $200 profit, they will automatically sell the position, close the position, and that's it. Although they definitely, at least on the technical side of it, could wait. If they would have waited a little bit longer, that would make them pass the evaluation or at least double the profit.
Which, when you scroll on Twitter, that's all you'll ever see, or Instagram, or you talk to people in trading groups. It's if I held for a few more hours, if I held for one more day, it's a lot of ifs and buts.
100%. And one of the tips that I gave throughout the years, and it works for me perfectly, is just to keep a tiny position on. If you got 100 shares, leave 5 shares at the beginning. It's not to make money.
Training your brain.
Exactly that. And once you prove that to your brain, you would be very comfortable of leaving another chunk, 20%, 30% to continue to run.
Yeah. I mean, the other bit of advice I would give is when I was trading 20 years ago, to be around the biggest and best traders, you didn't have that option. I mean, you some would have had that option, but most people don't. If you're trading from home, or if you've got into a company, whatever it may be, you're on the ground level. If you're trading at home, you've got no one 20 years ago to be around. You know, like in most things in life, you become what you're around. If you're around super healthy people, I don't drink, I don't smoke, I do 6 miles a day, I go to the gym. If you're around that, you usually become it. If you're around very unhealthy people, usually become very unhealthy. So it's the same with this. But we're living in a day and age now, you've got to pick and choose, but it's pretty obvious. You said it earlier. Anyone who's claiming to make tens of thousands a day on the beach with a Lamborghini trading from a laptop, it's not real. It's pretty obvious who the biggest and best names and successful names are in the industry. Now with this day and age, podcasts, the internet, YouTube, you can literally be around some of the biggest and best traders and you can learn from them. And then, as I said, you become what you're around. We never had that 20 years. There was no option to be around that level of success, knowledge. But now you can actually be around that by listening to the podcast, by being around the right people. So for me, instead of doom scrolling and on Instagram every day, just look at TikTok, looking at nonsense, if you can put an hour or two a day listening, analyzing what the traders in the industry that you're in are doing daily, that for me is that's going to be the difference between going around in circles or just going down versus to actually steadily going up.
100% agree with you. Adrian, we're going to finish here. Thanks so much for coming.
Pleasure, Michael.
Guys at home that want to check us out, go to tradethepool.com and we'll see you on the next video. Thanks again. Take care, guys.
See you, Michael.